Three. Hey, everybody. Hope you're having a great week. This week, you get me, Justin Wood, not Mr. Mark Pfeiffer. I am on the Mortgage Mark team, a loan officer here in our group. So I'll be taking the reins this week on your weekly update. So without further ado, let's get it kicked off. All right, team. So let's see what's going on with rates this week. Well, I had a tough day today, but certainly it doesn't mean that they're not out of realm as far as qualifying goes. But still, rates are high right now, especially with all the news that's been going on. So as you can see today, rates are about 7.38%. These are probably not baseline on the news as of today, with all the jobs reports coming out, which we'll talk to in a little bit. And a lot of inventory is still low as well. But yeah, I'd say today it's probably pretty comparable, up in the sevens. So not ideal, certainly, but definitely want to unpack that as we go through these slides. All right, so we've reversed it a little bit today for the market analysis. This is actually the 10-year Treasury bond. As you can see, it's over 4 for the first time in the past 4 months. So high 10-year Treasury bond, high mortgage interest rates, right? At one point today for mortgage bonds, we were down 92 basis points. As Mark says, red is bad for mortgage bonds and green is good. In this example, if green is up, that's actually bad for interest rates as far as to the consumer side. So not a great day in mortgage bond world, but certainly I just want to give you guys a little bit look at the chart and see there is a 4-month differential and we're at our highest point. Now the jobs report, let's unpack that a little bit too. Guys, over double of what they are expecting as far as the jobs reports numbers go. The estimate was 225K and we're at 497K. As you can see, a lot of that was based on small or mid-sized companies. But out of that big number, right, leisure and hospitality led the way, which was actually 232,000 of those jobs. Now, that may be coming to an end soon, because basically as of April 2019, there were about 16 million employees in this sector. Now there are 16.7 million, right? COVID shut down a lot of the hospitality and hotel business and, restaurants, they got laid off. But for now, though, we're seeing those games may be coming to a close, but still, it's a massive piece of the pie when you're looking at the jobs report. So there you go. Now, the Fed does see more rates hikes ahead, but it's a little bit slower pace. When you look at the minutes, all but 2 of the 18 expected at least 1 hike and 12 expected 2 or more. So certainly while the minutes did come out, there was some disagreement among members, but certainly when the experts are arguing, then there's some troubled waters ahead. So keep that in mind with the Fed. They did push pause on the rate hike, but we expect more to come for this year to help curb inflation. And as you can see, 30-year fixed. Remember, the scale was from June the 2nd up until June the 30th. Today, they're probably pushing a little bit up here, just with what's been going on in the market. And as a result, mortgage applications have hit, their lowest levels in a month. Not to be unexpected, right? Somebody that was going to make a move this summer probably already applied. So some of the stragglers coming in may be looking to make a move for this fall, but ultimately it just comes down to what's going on out and what they can afford. And as a result, as you can see, the application demand has dropped too, though not too far off the levels that we'd seen just for the past few months. So if people want to move, they're going to move, right? So it's important to find that solution for helping you build that strategy heading forward. Now, speaking of loans, average loan size actually decreased, and we're seeing that a lot more too. Obviously, people want more affordability. They want to borrow less. Money's expensive, right? So when we're looking at those down payment scenarios, a lot of folks are just taking their equity and putting it down towards a lower down payment. This is a national average, by the way. I just want to be clear on that. So, obviously some of the coastal towns or even pockets of, our DFW metro area, loan amounts are much higher than this. But from a national average, the loan size has decreased just because people are looking for more affordability options too. Now, house hunting is definitely tough, but guess what? About to get a lot tougher. And the reason being, in June, the numbers for home sales fell to their lowest levels for the first time in a year. Inventory is low, guys, and we know that because of what we'll talk about here in a little bit. People are staying put. They don't want to move. They don't want to leave their low rate in the 2s or 3s, and the affordability is obviously an issue when rates are hovering around the 7% mark today. And with the baby boomers, obviously our educators and helped us to learn how to get the American dream and get a home. Well, they're not leaving their house. They're staying put. And the result is that 38% of homeowners over 65 have lived in their same home for more than 30 years, and another almost 40% have been in their home for more than a decade. So while they've carved the path to homeownership and they're, certainly have earned that right, they're not moving. And that makes sense too when you think about it, right? Usually as you're approaching retirement, you kind of get in the home that you want to stay in. And, with the rates being what they were a few years ago, they've got no reason to make that move too. And the nice takeaway from the slide is that only 1 out of every 5 retirement age households have moved in the last 10 years. So 20% of the boomers are moving. So just interesting stat that leads to why housing supply is as low as it is right now. But for our premium clients, certainly if you want to buy this house, the University Park, has hit the market, $20 million. And it's the most expensive listing in June in Texas. 14,000 square feet. That's $1,400 per square foot. And it was the largest hit the market last month. It was built in 1959. It's got 10 bathrooms, 6 bedrooms, and a rose garden. And then for my golfers, a 9-hole putting green. So if you want to enjoy all that, it can be for the cool price of your $20 million bill. So there you go, team. Saw this too. This was trending on TikTok, went viral. Pretty neat story. A DFW author, he went viral after his book signing. Somebody posted a video saying it looked kind of defeated, but certainly the internet won again. They came out and made him the #1 bestseller on Amazon. Pretty neat. Still trying to wrap his head around it. So bless you, TikTok, and all you viral video followers for just making this guy's day, and probably making a lot better things as far as the bank account goes too. The book's called Lee Howard and the Ghost of Simmons Pierce Mansion. So if you want a copy, go pick it up. Help this guy out. All right. And last thing, as always, please get social with us. Get these videos, updates. You got the Instagram, Facebook, TikTok, Twitter, and of course, YouTube, where a lot of you guys are getting this channel. And as always, we appreciate you guys watching, and y'all have a great week ahead, and contact us as always on the Mortgage Mark team if we can help be a resource for you. Take care. Thanks, guys.